Okay. Hey, C, good morning. What a day, huh? What a day. It's a horror. I think it's the most horrible thing. I think it's terrible. I mean, NATO needs to really up their troops. Not that I'm pro-war. I'm not pro-war, but this is like Hitler. This is like Hitler. I mean, especially when people want to negotiate. It's pretty upsetting. I mean, I don't know enough about it, about the politics of it, but I just know that invading a country on which, David, for what? On tick strike? Or everything? I didn't get in. Oh, you know what? I didn't check my email this morning yet. I didn't have time. I probably have the email for financial juice only. So it's a good deal, no matter how you look at it, because it's like 47 a month. It comes to like 47. Dutchy, it's terribly sad. Terribly sad. It's only the governments that pit regular people against regular people, because that's how they stay in power. By keeping us fighting, they steal all our money. No one's in favor of this war. No one. But the horrible thing is, we're so guilty of doing the same things. We have to change the way we do our foreign policy. We can't go into other countries and try to tell people to do what we want them to do either. The whole world is politically, it is a mess. The world is a mess. Everything is. I'm so feeling pretty down today. Let's start the room. So we're streaming this morning, right, Chantal? You got a stream going? Yes, you do. Okay. Okay, good morning, everyone, and welcome to the 10-Minute Trades Trade Room. My name is Lee Goldstein. I'm the trading director at 10-Minute Trades. Just a reminder that everything we discuss is for educational purposes. It is possible to lose money trading futures, so please trade carefully. I want to thank our friends on YouTube for watching. Let me get my news set up. So this is a very difficult decision to even trade today. Everybody realizes this is not normal. It's not normal trading. So everything you do is a big risk today. The markets are, this is not, they haven't even mentioned the GDP report on the news, on financial news. And this is like the more important of all the GDP reports. I think no matter what, it's going to move the market momentarily. It will probably do, but it may be an unnatural, weird move. That's what you have to almost expect. abnormalcy, abnormality today. You kind of have to expect abnormality. I mean, look, gold's up over $50. The Nasdaq's down on my charts over 400 points. You're just not going to get a normal news reaction, even to a gigantic report. I think, well, like I said, I think we'll get a reaction, but our, it's almost impossible to know what the settings should be because it's abnormal trading. It's not normal. Even if you're a discretionary trader, this isn't normal markets. It's not, I guess it's somewhat easier in some ways for discretionary traders because maybe these are normal markets for discretionary traders, right? The markets have been on crack for months, and this is just like one more crack pipe. It's like one more session. So, I'm not trying to make jokes. I don't think it's funny. Yeah. Oil. I mean, look, you just want to be careful. I'm listening to Financial Juice, the Squawk Box, as I'm talking here. Okay, so look, I very honestly, like I said, all of our testing, it kind of goes out the window today. Does anybody disagree? Does anybody think that today is normal trading and that I'm being ridiculous? I mean, tell me the truth, what you think. I'm just curious. Mark, you're a discretionary trader. Do you look at today as a totally normal discretionary day? And you can say yes, I won't be insulted. I think the rules for discretionary trading are different than what we do anyway. So, and the markets they have been unbelievably volatile. So, so look, I got up early. I started looking at the markets. I did some testing. It doesn't mean a lot because of the markets. I we have a fairly new setup, a large breakout on the NQ. My gut feeling is that the NQ is going to whip, but it's only a feeling. There's nothing to base it on. There's no, I have no reason to think that other than the markets are extra volatile because of what's going on in the world. So I just don't think any of our setups are super safe today. So the thing that I was thinking, what do I want to do? Do I want to trade it? Do I want to tell everybody just be safe and just, sit back and protect your account today? You can trade the setup using one contract, right? There's also another issue. Even if it was a normal day, you have a collection of news. GDP preliminary has been hard to trade at times. And we used to trade it with gold. Right now, we're not trading it with gold anymore. So our setup is relatively new. The breakout is new. So my gut feeling is It's a bracket of 20. It's a stop of 20. The testing that I showed is generally when this trade doesn't work, it's not because of the stop size, this particular trade, it's because it changes direction. And even a bigger stop is not necessarily going to keep you safe in this particular trade or in this particular event. And it's also an event that we don't trade every week. Although right now, we might be changing that. We may be changing that. So we have a range set up. And in my testing, the breakout on very volatile days did better than the range on some of them. There's no, I guess what I was going to say is the testing's not 100% definitive at this time. The reactions tend to be sometimes inconsistent. So my gut feeling is trade one contract. In case there's a somewhat normal move. I mean, I just wouldn't claim to really be able to trade these markets today really well. I don't think that if I was a discretionary trader, I don't know if I would be trading today. It's been so long since I've been a discretionary trader that, you know, I'm not even able to make that decision these days. I don't trade that way anymore, really. But you know, just to give you an example on, I mean, the testing just doesn't mean anything. I could show you a day when durable goods, you know, traded in a volatile manner, right? In January, there was a GDP report. And see, we were trading gold and the ES on these dates. So it's not even a test that helps us. You know, looking at the way we traded these doesn't help us. What helps and is better is the testing. So I went back to the 27th, which was a pretty volatile trading day. January 27th, traded our NQ setup. And it worked on the 27th. The range did not. And also, you know, it's volatile simulated trading. You're not always getting 100% a perfect reaction either. So look, the reality is there's extra risk today. When there's extra risk, it's probably not smart to trade extra large, right? I'm going to look at the MNQ on the right and put in our alternative range trade setup to see if it has any, just to see how it looks. What I might do is move the news off to the side. So we have a range trade we've been testing on Thursdays. And the range trade, so with a range trade, graphic shown on chart gets checked. The range has a start time, 8:30 in this case. 8:30. And then we have two targets. And our targets are 15 and 40. And I'm going to stay with it today. But I'm not going to manage or even look at this trade. And the stop is 20. And I know some people are saying, yeah, normally in a lot of our new trades, we are using much bigger stops for the NQ. We are. This particular trade has tested where the stop seems okay. And then the end of our range is 930.05. That's the end of the range. And then, of course, you have to make sure that you choose a range trade, which is chosen. And then I'll label it. And again, it's NMNQ, and I'm not really going to watch it. I'm going to concentrate on our real trade. I think I should be able to see the range, even with the chart being small. So the setup for our regular trade, and if you remember last week, I canceled too soon, okay? So I would not cancel this. I would let it fill. Let it fill and take the risk if you're going to trade it, because canceling it last week too soon missed a really good trade. And what we're seeing in general with many reports is that they're just responding, the market's responding late, more slowly. Not late, more slowly. Okay? That's what we're seeing. Okay. So the setup, so the question is, what do you want to risk? Do you want to risk more than 200 on this? It's $20. It's 20 ticks per contract. So it's roughly $100. You know, since we've been here, I'd say the it's pretty volatile. It's not like insane, off the cuff insane. We've seen up. Maybe I'll take that back. I'll take it back. Okay. I think so. You know, just watching right now, everybody, if you are a member, I think you probably shouldn't trade this morning. I mean, it's a war. It just started. The markets are reacting to that. You know, look at that candle. The funny thing about news trading is, you know, sometimes when things are insane, we get surprisingly normal behavior. And then sometimes the complete opposite is true. So, you know, look, these are troubled times. Just that it's, you know, the candle, it went from 56. It's like 20-point candle in a minute. You know, that's 1 minute of movement. Most probably what you're going to see this morning is just, no matter what the news, you probably just get a burst to the downside. I mean, remember what we say about some of these reports when the markets are really volatile. Sometimes you don't get a response to the news, you just get a response from the market in the same direction it's going. And we see that, certainly we've seen it with gold. I'm just thinking, you know, what's safe? And you know, I'm a little bit uncertain in these markets. Who's trading out there? I'm just curious what people are doing. What are you doing? What do you think? What's your opinion? Anybody got an opinion? So my strategy's already up there. I have it up. So let me check it, okay? It's because I was testing this morning. So it's a bracket of 20. TJ here trading. Nothing stops TJ. Profit is 20, target is 40, stop is 20. 20 tick bracket. Entry time is 8:29:59. I'm just deciding if I want to trade one contract or two. So I think I'll trade one for 30 ticks, go somewhere in the middle. I'm just listening to a little bit of news there for a second. So I think I'm going to trade just one contract. I think there's a lot of risk this morning. Yes, David, I totally agree. They're not even barely mentioning the news reports. They're just not mentioning them. So I'll just trade one contract. I don't think it makes sense to put a lot of money at risk, and we can see what happens and then decide. It'll help us decide what to do possibly the rest of the week. So I'm just looking for one tick for 30, one target for 30. Now they are talking about jobs a little bit, the jobless claims. But I do agree. There's also too much darn news. There's a lot of news. There's a lot of news. So, I mean, there's a temptation to trade the range. But that's why I'm looking at it with the NQ. Let's check our time sync. But, you know, the market is moving in chunks, right? It's not moving in ticks all the time this morning. And that's challenging. My feeling is we'll probably get filled immediately, even almost before the news is out. I was just going to turn off my crosshair. Let's check our time sync. And I want to thank you all for watching us on YouTube. If you want to hit the like button and sign up for our channel, you'll know the next time we'll be streaming. It'll be tomorrow. That much I can tell you. And I'm going to the website time.is. Chantal, you trading this? Now, it worked nicely last week, but this is not last week, folks. No, this is not anything like last week. Mark, are you talking the gold open? What'd it do? I wasn't watching this morning. We weren't watching, obviously. Which direction? It went up. No, I'm not surprised. Look at the downward move on it. Going up is pretty normal. It's not surprising. So look, we have a DMM, right? There's plenty of times we trade alternative setups in the room because of the difficulty of these current markets. This new setup tests well recently, okay? And the range trade, it's difficult not to do the range trade today. That's the decision for me. Should I do an alternative setup that we've been testing? Because maybe, we're better off waiting 5 seconds today. It's certainly a thought, right? I'm listening to the news. If I get quiet, it's just because I'm listening to the news. I'm just telling you, some of the things I think about. If it was a perfect range, like it is on some of our other testing, then I would do it. This has been a challenging time to trade for a long time. When the world crisis began, the Thursday jobless claims took on much more importance than they ever had before. Now, I do reserve the right to cancel my trade at the last second by unchecking the checkbox. If I just feel that things don't look safe, you can always do that. You just uncheck the check mark. I mean, it's like I was saying before, it looks to me it really looks to me like it's an unsafe market. That's what it looks like to me. Says, different things that could happen. Of course, you can get a whipsaw. Of course, you can get just a continuation down. The news could come out and the market could just push down just because it's so far down. Sometimes you get a news report and the market just goes in the continuation direction, regardless of whether it's good news or bad. So just understand it's challenging this morning. And what I was saying is probably if I was a regular member, I'd probably sit it out today. you don't have to take risk when you don't want to. That's the great part of being a trader. You choose. It's not like a job where you know, you're driving a bus and you just have to go into work no matter what. It's totally different. You can work, but you could protect your account on a day when you think you don't want to trade. You can make that choice. And you don't have to feel that you're a baby or a chicken for doing it. Those are just choices you make. So it took me a long time to be able to accept not trading less. It took me a very long time. So they are talking about the news on Financial Juice. So I do think there will be some sort of a market reaction. I wouldn't call it a family money trade today. It's hard to say if something is a family money trade with the markets the way they are right now. All right, let's watch. Trading one contract. I don't like that. See, we got filled before the news came out. We're going to get stopped out. So, it wasn't even much of a reaction. There wasn't even much of a reaction. So you could see what happened. It's just incredible. If you think about just when you think the market's going to be completely insane. So what's interesting is look at the range. Okay, it didn't fill yet. So before we go, I want to test the range on the regular NQ. I can't believe it hasn't filled, but it kept you safe. So that's the decision that makes the range better. Okay, it has a way of possibly keeping you safer. Michael, don't drive yourself crazy. We all go through that. Always, always, always. Choose trades which cause losses when you trade live, and then the sim trades are perfect. It seems that it's true, but it's not really true. That's not really what happens. So I'm wondering if I put my time in wrong on the range. So I'm going to download the data. It looks like I put the time in wrong. I apologize, but I don't think the time is right. 8:30 and 8:30. Oh, look, it's 9:30. What a dope. Nobody said anything. So let's look at the range. Let's look at the range. Let me download the data. Stay here for 5 minutes. So what's incredible, so you've got markets that are very down. And look, they had a response, but they did go both ways. So I'm going to download today's data right now. Okay. Let's download today's data. Today is the 24th. And all you do is, you've seen me do this a million times. So I download the data. We know the breakout didn't work live, okay? The breakout did not work, okay? So there's no point in testing the breakout. Now, maybe a larger bracket today, a 30-tick bracket, that's a lot of bracket, you know? It's a lot of bracket. But let's see if the range would have worked. So to put the range in, you just put today's date in. We'll put the time in. And Ninja will probably make us put the time in twice. The time I put in is 8:29 and 54 seconds. Okay. And I'm not going to change our range setup because we know how the market moved. I have to use the standard setup or it's cheating because we know, you know, the market certainly didn't explode in one direction. So let me remove my setup, put in my range so everyone can see it. So I have a template. I'm going to load it. Thursday claims on the range. And it's 6 ticks above and below the range. Okay, that's the setup. 6 ticks above and below. Graphic shown on chart. 8:30 is the start time. We had 15 and 40 on the targets. The stop was 20, one contract each. Our range entry time was 8:30:05, and it's set. It's ready. It's correct. Okay, and I'm on playback. So this is, it's going to make me type the time in again, which it did. So we'll put the start time in, 8:29:54. Our range doesn't start drawing until 8:30. And it will wait 5 seconds. With the kind of reaction that we had today, it's not easy today. It was certainly not a normal GDP reaction by any means. So there's our range starting to draw at 8:30. There's the orders. I think it went down first, maybe. Let's see if it would have filled. Yeah, see, so it would have filled to the downside, and then I think it went up. And it filled to the downside. Yeah, so our settings, and it wasn't so fast that the test doesn't work, okay? It wasn't so fast that the test doesn't work. So look, folks, I mean, look, I traded one contract, understanding and knowing that we had a difficult, potentially unsafe trade today. Just because I didn't expect a normal market reaction. And we really didn't get one. It was not a normal market reaction to those reports. It just wasn't. All the news was good, right? Although GDP is high, so that's not necessarily good news, right? Now, for some reason, my chart has a gap. I don't know if I can get rid of that. There it is. Okay. So eventually the market moved up. Okay. But it was 5 minutes. It was after the news. It was after the news. So, Michael, I guess if you can deal with it, just trade small on the days that don't let me scare you out of the trades all the time. Trade small, right? So that you don't have to choose as many. In other words, you could trade more of them small or one contract when it's very risky. or when the markets are extremely volatile. Like this morning, because of gold, I highly doubt that I have any interest in trading new homes. We don't have a DMM for it, and it's not a big, it's a report that moves, but I just don't know that today's the day to trade it with real money. But this particular report, there was an after the news setup. Even our range didn't work. Even the range didn't work. So there is something to be said, and I'm not trying to be a wise guy or difficult, but the third decision that we didn't even talk about was possibly, even in a normal market, when you have a collection of news like this, you could do what Mark did and trade after the news. You could trade after the news. And he uses the tick strike indicator to help him to get in after the news. Am I right on that, Mark? It's not unreasonable. Now, sometimes I don't do it because we need to know what parts of our system are working, and we need to know how to trade the next time. I need to do these live trades using our setup because that's the way we trade. But we can do more after the news, which is really something we want to do. And it's not so easy to automatically start doing it when we've not really done it before. But it is something we have to start paying more attention to. I know we've been saying it, and it's just something that we will start doing. So, Mark, just tell me about what you use the software these days, from what I understand. What setup are you using? What setup did you use today? What setup did you use today, if you feel like sharing it? In the software, what time did you enter? Now, if I was watching signals, not counting tick strike, just looking at signals that we look at, at 8:30 there was a lot of chop, but the market looked long. But if you went in, you had to have pretty darn big stops. And how big a stop? I would think you have to use a 50 tick stop at least if you're going to take a trade. At least 50 tick stop. Yeah, I was thinking 40 initially, to be honest. That's what I was thinking. So in other words, you wait for tick strike to give you a bullish. What time did tick strike give a bullish signal? Eight. Oh, you traded before the news? You traded it before the news? See, I would not trade. I would not go in before the news. That I wouldn't do. I'd wait for the news and then wait for the signal. Okay, 5:35. Yeah, that makes sense to me, which is 8:35 our time. That's when you could see the squeeze is heading up nicely also. The moving averages are pointed up. And then if you get a good tick strike signal, you have motivation to go in. So, all right, we're going to start on, especially on reports like this, where we're just a little bit unsure what the safest thing to do is. We can still test our breakout, and you realize, because those after news moves, sometimes they're 3-4 minutes after the report. Okay. Right. It works well with multiple news announcements, which is the perfect time we would want to look at it. When we only have one announcement, we're pretty comfortable with our regular setups. You know, sometimes today, this was not a normal GDP reaction in any way, shape, or form. It was completely abnormal. And it's okay that it's abnormal, but we need that third way to trade. We have a range, we have a breakout, and you want to be able to maybe get in after. It's not unreasonable. Because look, it's a tremendous move. Now the market is, well, the market is down. Hang on one sec. The market's down. Yeah, David. So what he's using, David, is this. So if you want to do something after the news, right? You set up the squeeze play. The squeeze play is basically the one-click range trade with a few extra features. So he chooses the trade type is the squeeze play. With the squeeze play, you generally are going to know the direction you want to go in. So the big question mark is what you're using in your setup. Are you using ticks above and below the range? What are you using? Are you using, and what are you using for the bar look back? Those are the two questions. What are you using for ticks above and below? And what are you using for bar look back? Yep. So I agree with the one above and below because you want to get in when you get that signal. And then I'm guessing on a bar look back, you're using, right. So you don't use time charts. You're using Renkos, crazy Renkos. You're using range. Okay. So he's using, so David, just to answer, if you want to experiment, he's using one tick above and below the range. Do you watch the range, Mark? Do you watch the range? Do you watch the actual range or do you not even bother? And he's using a bar look back of 1. So 1 ticks above the range, 1 ticks below the range. You don't have to show the range on the chart. But so when you enable that trade, David, it'll look like this. Give me a second. I just have to change the account. It thinks it's on playback still. So the squeeze play will enable and it'll look like this. Give me a second. Where's my account? Come on, come on, come on. So the way that it works, so Mark knows, right? So it's 8:30. He's watching and he's thinking to himself probably, well, it looks like this could be bullish. The squeeze is looking bullish, but he's not guessing that, right? So you're using the ATR. And where do you get the value for the ATR these days? No, but what is there there's an indicator? Isn't there an indicator? Do you get it from an indicator? What does ATR stand for? I'm losing my mind. I forgot. Average true range. Thank you. So how do you calculate the average true range? So you have to calculate it somehow. So he'll use the NQ tick strike. And then when he gets a bullish signal, you'll get green on the tick strike indicator and you'll get a number. And you can hear it if you have your volume on also. So I would probably consider doing it without the ATR. That's just me. I think that I would have enough signals. I've got the squeeze signal giving me an idea. But so let's say you get a bullish signal from your indicator. So you know you want to go long. So you click the long button. If you know you want to go short, you could click the one-click range short button. And the market's got to go one tick in your direction to pull you in. So if there's a big reversal, immediately it may not take you in long. It might protect you, even though most of the time you're probably going to get filled. I have not looked at the ATR in 1,000 years, Mark. So I don't even remember. So that's a signal, right? A bullish signal from tick strike. Say it was right after the news. That might be the signal to go long, right? Well, I'm just curious. How do you calculate? Where do you get the ATR from? Where do you get it from? Okay, it's on another platform. Okay. There's probably an indicator that gives the ATR, is my guess, if you want to use it. But so after the news, if there was bullish behavior, right? Moving averages are still pointing up, bullish indicators, right after the news, there might have been an opportunity to get in somewhere on this, excuse me, this big candle, okay? ATR equals the absolute move of the high or low. Thank you. So AJ, how do you get it with Ninja? If somebody wants to look at it. Indicator. Oh, it's good. Simple. Mark, what size range bars do you use? So Mark was saying the other thing he does, and this is everybody's different, he uses range charts. Okay. What number range do you use? Okay, so it changes every day. Today it's 42. Oh, so are you saying you use the ATR as your range chart? That's very interesting. Is that what you're doing? In other words, what the ATR is, that's what you set your range bars to? That's very clever. Very clever. So today it was 42. So you have to, if you want to insert a specific value, you go to data series, type and value range, and then you can type in a 42, for instance. So they're different type. It's a different type of chart. Okay. It's a different type of chart. and then, you know, compare it to the 1 minute. So it's interesting. It's just one person's setup, you know, and it works well for him. It works well for him. I don't think it totally makes sense to always think you have to copy the way someone else is doing everything. You can take the best elements of what they're doing and figure out how it works for you. See, now that's the beginning of that's the first negative signal we've seen on tick strike since we started looking at it like 5, 6, 7 minutes ago. So that might be a heads up. Might be, right? Also, the squeeze agrees with it. It's changing momentum. All right. So, folks, I hope we taught you something that might help on a particular day like today, a trade, you know, situation like today where it might have been too risky to trade. I think we made the right decision, by keeping it very small. The only thing we didn't check, since we're here, so the only thing I did not check, would a larger bracket have kept us safe today? Now, it's very hard to use a larger bracket than 20 because you're leaving all your profit on the table, right? But the markets are insane. So you certainly could say to yourself, well, let me try a 30 tick bracket with the war. There's a war going on. Let me increase my bracket by 10 ticks, right? On the breakout. Now, I could have thought of that. I mean, I thought of it. We mentioned it. My throat is just, I'm in trouble with my throat. I'm sorry. But I felt that a 30 tick bracket is just leaving too much profit on the table. But just for fun, we're here. I can change the bracket in a second, right? Let me get rid of the range. Let me load in my NQ template for Thursday claims and just change the bracket to 30. Everything else is going to stay the same. Our targets, I'm not changing anything. I'm just looking to see, would the bracket, because we got filled early. There's no question we got filled early. Sometimes changing the bracket will make it so you don't get filled early. It might not make the trade safe or work, but it might prevent you from getting filled early and give you a shot. I'm going to record this because I love having these video tests that we can look back on. It's very helpful. So all I did was change the bracket. Okay. So our bracket's going to be 30. There's the bracket. Now remember, we got filled. I don't remember which direction we got filled. I think short initially. And it was slow. It was not a very quick fill. It was the opposite of what I thought it would be. I thought it would be a very quick fill. So the 30 tick bracket, I think the problem with the initial couple of minutes of the news reaction, this is the time clock you're looking at when you're doing a replay. My gut feeling is it was choppy. Yeah, see, it was choppy. See, you didn't even see the price shoot down, but it did. Okay. And that's so the bracket, you had a 15 tick target that didn't survive your increase in the bracket. Okay. It didn't survive the increase in the bracket. David, so we haven't been trading the oil inventory live. And I talked to my boss yesterday about, I think we should be trading it live going forward, at least when we think it's appropriate. I think oil and natural gas have tremendous risk today, especially because oil is not on its regular day also, nor is it at its regular time. So it's definitely, everything is extra risky today. I know that some folks will trade them. Some folks will trade them. Today's not the day to start trading live on something that you haven't been trading live. You want to put the odds in your favor. You don't want to do the riskiest behavior, right? But that's up to everybody makes that decision. There's a part of me that thinks, look, the API trade was great yesterday. And AJ makes a good point. Increase your stop. Absolutely. You can do that. That makes more risk also. Risk of more loss, obviously. Risk of also surviving a volatile move. There's lots of approaches. So I'm just saying these are the decisions you make. They're the decisions you make. So I'm just making a note that the video I made was a 30 tick bracket and it didn't work either. And the 30 tick bracket didn't work because there just wasn't enough profit. There just wasn't enough profit in the moves because the market didn't find its direction for a couple of minutes after that trade. But, you know, you're looking at the replay data. You were starting to get signals. That maybe this market was done going down for a little while. Now, it's hard to say. I would not necessarily call the GDP news good. It's inflationary, okay? It's more than 6.9. So it's inflationary news. But the market's down so much today that it might, you might just be dealing with a market that's getting some of it back because that's normal. All right, folks. We'll be back at 9:30 for new homes. We'll stay in the room for oil and gas. So it'll be a long room. Okay? So I'll see everybody in half an hour. I hope everybody learned something. Thanks, everybody on YouTube. If you like what you see here on YouTube, join our trade room. We'd love to have you join the trade room. www.jointhetraderoom.com. It's not delayed like it is on YouTube. It's $97 a month. If you take us up on this offer, www.jointhetraderoom.com. We discuss a lot of good ideas besides just the way we normally trade that you can use for dealing with news. All right, folks, I'll see everybody at 9:30. So it's only half an hour. All right. See you later.